Hello everyone guys, and I have one question for you. Are you tired of missing great trade opportunities? In today's video I'm going to show you top 3 trade entries what every beginner traders need to know to maximize profits and minimize losses. These strategies are simply but incredibly effective, and by the end of this video you will be ready to start using them in your own trades.
And if you stick around till the end, I'll show you a bonus entry strategy what we talked about but can give you a real edge.
And don't forget to subscribe my Telegram channel where I write my thoughts on the market, useful information about trading and post my trades. Have fun watching. So this is the first method how to enter a good deal from the FUG and break-in structure. As I showed you in the previous trading lessons, you already know how to determine your FUG and how to trade from it. But here I will show you next steps to determine a good trade. So the first thing we need to do is to determine our FUG like that, and after that we are waiting for break of structure on these meetings. After that we determine our break of structure with our direction, and we are waiting for forming now higher low. After the lower low we are waiting for the retest of our FUG zone. It's better to wait for the 50% retest to open a good deal with a good risk ratio. And after that we are placing our short deal with the conservative stop loss above our FUG and also capture the liquidity on the hour lower low point, and we are getting a good risk ratio after that. So the main tips in this method is always looking for liquidity, because liquidity is the power for movement in our money strategy. And now my thing is our FUG you need to determine correctly, and if you want an hour guide on the FUG, write it in the comments and I will show you now tips how to perfectly work with FUG. So on the bullish market it works the same way. You just need to determine your high and wait for break-in structure of it, and after the impulsive movement when the FUG formed you need to mark your break of structure and waiting for retest your FUG. Only after that you need to open a long deal with conservative take profits and stop losses like that. And third that, if you master this strategy, you will be the best trader in the world. We are beginning the second type of entering the deal. It's the sideways movements trading. In this method, you need to correctly determine your sideways movement range. How to do it? You need to pick the Fibonacci grid and place it. If you have a long impulsive movement, you need to place it from the highest point to the lowest, and the exact opposite way if you have a downtrend movement. After you determined your sideways movement, you need to look for the capturing of liquidity and point of interest zone. Here you has one point of liquidity, and here we has lowest point of liquidity. And here, after impulsive movement, you always will get a FUG or order block on our point of interest. And if you are at the beginning study of your trade here, you are waiting for the capturing of the liquidity on the highest point or on the lowest. If it's grab the highest, if it's grab the highest point of liquidity, it means what it will go down to our point of interest, but in the very rare cases it can move like that, form a new sideways movement, and after that go to the high. And I think it's a very risky way to enter a deal, especially for beginners, so we don't use it. We are waiting for the capturing of liquidity on the lowest point and entering our FUG zone, tested it, and only after that we are opening a good deal or the capturing of the highest liquidity, and don't place the take profit higher when your liquidity pool on the high, and place a conservative stop loss if you are a beginner. For the bearish movement the same way, but you need to place a Fibonacci grid from the lowest point to the highest to determine it correctly. And now I'm gonna show you a secret strategy in which you could open a trade just from 1 week. What you need to do, it works the same way as in our FUG, but it entered from a week. The two main factors entering from the week is our FUG, we need to have it on the chart, and the week capture the liquidity on the left side of the chart to make straight more valid. And only after that place your Fibonacci grid, determine your premium and discount market, and only after that you need to place a low deal for the capturing of liquidity, upside and conservative stop loss. What factors we have here for entering the deal? Capture the liquidity by the this week, capture this liquidity, and if else this trade, you always can look for a second position, second possibility to open trade. And don't forget what it is not just a basic week, it's a order block with a higher and lower time frames. Enter the trade from it because the order blocks are always works. So what we can see on this example, here has our foreign FUG, and we need market for the next deals if we are waiting for entering in trade. For this meanings we have the first retest of our FUG, but if you are a good trader you don't wanna enter the deal because you don't have any aspects to enter it, and we are waiting for retest of the FUG, and in the good way we are gonna wait for the capturing of this liquidity, so we are gonna open a deal. From this means example like that with a conservative stop loss and waiting. Now you are gonna be successful, but it's not a good risk ratio because we are gonna, I know we place it from our liquidity zone. We have a good conservative stop loss, but you don't need to place it like that, only with above our PVG or on the liquidity push, and the dealer gonna be successful. Here we have another example of our strategy in which we are entering from the PVG. Here we have our point of entry zone, and we are placing the short positions. Here we will conservative stop loss and take profits. You can place it like that if you are not sure in your trades, but it's way better worse if you are a trader. You are not gonna be confident in all your. Over here we have two factors: is our PVG, that's our downtrend, and we are waiting for the downtrend deal. For example, like that, and it's gonna look like that. More. As a factors, we have a free tap setup, what are captured our liquidity 3 times and touched our point of interest zone, and it means what our deal are going to be successful. And here we have the next example. Here's a PVG form, and after that we are waiting for the capturing of liquidity and breaking of structure. So it's already happened here. Here we determined our break of structure, and after that we need just to play. We need just to place our entering point with a conservative stop loss, and place your goals, for example, here on the capturing of liquidity or here on the retesting of PVG. And after that, we are waiting for the successful trade. So it is gonna be a very long trade, and if you are a good trader, you are already formed, fixed your profits on the risk meanings, and on the risk meanings, your stop loss are in the no risk zone, and you forget about it. So here we have an example of sideways movement. We have our impulsive long trend movement on which the sideways movement formed. We have our first pool liquidity and our lowest pool of liquidity. We have our premium and discount market. And of course here we have our PVG zone and order block zone from which we are gonna enter the deal after capturing of this liquidity. And as you can see, it's already captured. Afterwards the price are gonna be dropped to our point of interest zone, and from that perspective we are gonna enter the deal, get good risk reward ratio, and walk away with the profits. So here's another example of our sideways movement, where we see the impulsive movement. From we use the sideways format, we place our Fibonacci grid like that to determine it correctly. After that we mark the point of interest from which we are gonna enter the deal, from which we are looking for entering the deal, and we are waiting for capturing the lowest liquidity because we have a long side of this movement, a long impulsive movement before the sideways formed, and we need to guess deal from 50% on for the beginning, but in real deal you need to place a good conservative stop loss to get the area. So on the bearish markets, it looks the same way. You just do the opposite things, and don't forget what you need to spend a lot of times on the backtest, trade correctly. As of here we have our secret strategy from entering from the week. We marked our week as our point of entry, and afterward we don't get any reaction from the PG, and it is a very good mark what our liquidity structure does break after the testing of our PVG, and it means what our price are gonna go high. And we entered from the 50% or from the beginning of our week and place our conservative stop loss. But if you don't place the conservative stop loss, we're gonna get stop loss. So it's gonna look like that. And as I told you in the previous 5 rules, the week is order block on the higher and lower time frames. So here we can see our order block zone. We marked that, and then it has our long structure, our PVG, what are going to be retested. We have our point of interest zone here, and after that we can open the deal from this PVG. You can call it many ways, weak PVG, but it works the same way every time. So in this video I told you about 3 best entries for the newbies, and our examples and training lessons you can see in my Telegram channel by the link in the comments. Thank you for the watching, drop your likes and subscribe. Goodbye.